You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
And now, it's time for the show that breaks down the options market, from unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the option block with your host, Mark Longo from the Options Insider Media Group, and co-hosts Uncle Mike Tussaw from RCM Asset Management, Andrew the Rock Lobster Joe Vanazzi from OptionPit.com, and Mark the Greasy Meatball Sebastian from OptionPit.com. And now, get ready to hit the option block.
All right, everybody. That rockin' tune means it's time once again for a little show we like to call around here, the Option Block. Everyone's favorite. Hopefully it's your favorite. I know it's my bi-weekly source for all things options related. A little bit of options wit, a little bit of options wisdom, a little bit of analysis, some unusual activity, of course, some strategy, a lot actually sometimes, of your questions, and a little bit of peering into the future, and we wrap it all up in a nice little bow, and that is the present. That is the Option Block. My name is Mark Longo from theoptionsinsider.com, as well as, of course, from the ever-expanding, ever-exciting Options Insider Radio Network. 14 programs for you guys to enjoy on the old network, including, of course, our most recent This Week in Futures Options, a.k.a. TWIFO. Find that wherever you find your favorite programs. A couple people have said, hey, I don't see it in the mobile app. If for some reason it's not there, let us know. We'll get it tweaked for you on your version, iOS, Android. Of course, it's also available via wherever you find your favorite shows, including our website, theoptionsinsider.com, and on iTunes, and on TuneIn, and on Stitcher, and so on and so forth. And while you're streaming that, or maybe your favorite archived episodes of this here program, the Option Block, or whatever else you enjoy on our network, we hope you send us your questions, your comments, your insights. We love to hear from you guys. In case we haven't made it abundantly obvious on our 9.5 year now course of doing this, we love to hear from you guys. Send us your questions. Easiest way, the website. Of course, it has the social media on there. Of course, the website feedback form. You guys like to use that, as well as questions at theoptionsinsider.com or twitter.com/options, facebook.com/theoptionsinsider, or via the old stock twits at theoptionsinsider.com. And again, all that's baked into the mobile app. If you are indeed so inclined, or maybe you're just so lazy you don't feel like getting out while you're streaming, you want to just send us some feedback right there. We made it easy for you guys to do just that. And we have a little bit of time to fill here at the top of the show because, of course, Uncle Mike's still on his epic sojourn through, I believe he's through the Caribbean right now on his trip there, his cruise with the old family. He'll be back next week. So if you're missing yourself some strategery, you said, hey, I didn't get my strategy block filled, don't worry. We'll get you covered next week. And the Greasy Meatball should be joining us momentarily. He is somewhere en route via our mystical traffic here in Chicago, en route to the Options Insider Studios. But you know what? We can't wait for the meatball. The show must go on. So without further ado, let's dive right on into the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the Trading Block.
All right, everybody, welcome to the Trading Block. This is indeed the portion of the program where we break down what was moving, what was shaking, what was rocking, what was rolling from a broad market perspective. We are recording this, of course, and indeed streaming it live on Monday the 9th at about 3 p.m., a little after 3 p.m. Central here, so right after the close here, Central Time. And, of course, if you guys aren't joining us streaming, we'd love to see you. check out the Mixlr app. I neglected to mention that at the top of the show. MIXLR. You can get it there on pretty much your device of choice. So just follow the links we tweet out and put on Facebook and LinkedIn and everywhere else, and you guys can get it there as well. I'm sorry, I said Monday at the top of the show. I meant Thursday. As you can tell, it's been a crazy week for us here streaming, and as we are recording this, of course, a little bit of a down day on the old street. Most of the major indices off slightly on the day, pretty much fractionally unched, a couple of handles off on the S&P. That's after the S&P having about a 9-10 handle range on the day today. So not a bad day overall from the S&P, certainly rebounding from the 10-handle lows we saw earlier in the day, but overall, not a heck of a lot. Really firing off. Everyone's kind of seems like their eyes are firmly glued on what's going on next week, and indeed the week beyond. And of course, talking about what we're seeing out there, because most of the major indices off. And VIX cash taking a bit of an inhale today, off about half a handle, right around the 1460 level or so right now. So about a point higher than where it was at the end of last week, maybe somewhere between half a handle and a handle over there. And of course, we were prognosticating on vol views where that will be tomorrow. We'll see who will wind up the winner. I think I was about the 13.5 level. We'll see how that shakes out tomorrow. Either way, the VIX's response to what's been going on out there in the marketplace has been, I think, surprisingly muted to a lot of people. We kind of commented on this this show last week, going into the non-farms, just exactly how surprising it was. We actually saw a bit of a sell-off from a vol perspective going into what was seen by many as a very pivotal number in the marketplace. Certainly the most resonant non-farms we've had in quite some time out there on the street, and yet people were selling vol, not aggressively, but they were certainly not holding on to it, not keeping their powder dry by any means. And of course, let's see here, 1 second here, got some behind the scenes shenanigans going on, listeners. And as we are doing that, of course, let's just get this sorted out.
Hello.
Oh, is that the voice of the greasy meatball I hear?
It is the voice of El Meatball de Greasy.
Where are you now, sir? Let's play Where's the Meatball? Where are you right now?
Where's the meatball? The meatball's on a train platform waiting for the train to come in, because he spent all day installing a fence. So it was a 2-day project. Me and my father-in-law put up a brand new fence in my backyard, and looks pretty awesome.
So I assume by that, since you're on a train platform, that you're not heading into the studio then?
No, I'm heading directly into the studio. I'm coming from Riverside, so I'm coming in to see you.
Well, by the time you get here, then I'd imagine the show will be well underway, sir. So we won't.
It will indeed, but I'm happy to be on the podcast here recording. So,
well, I was just talking about, since you have a few minutes before your train comes, I was just talking about how VIX's response this week, kind of a little bit muted, given all the things that are on the fence coming up next week. What are your thoughts here? What caught your eyes in today's activity? And also, what's been unfolding out there in ye old VIX? Some people kind of a little bit of head scratcher out there.
Yeah, the one thing I would comment is that, the VIX hasn't done much, but neither is the market. So the fact that the VIX is kind of up, and the market really is not down, maybe even up on the week, I think that points toward at least a slow swelling of some sort of fear of volatility exposure building in the market. I do think there is a little bit of things to worry about in that respect. So, my thought process is that, I think we're starting to enter the very beginning of a crescendo heading into the June Fed meeting, because I think people aren't so worried about a rate hike anymore, but they're interested in the language. And then the other piece is we've got this Brexit vote, which is kind of gone from, I'm sure there's no way that they're going to leave, to maybe 60-40 to back to 50-50 or 40-60. So that Brexit vote is very up in the air, and it's going to be interesting to see which way things end up moving.
Speaking of the Brexit vote, we put out to our listeners earlier this week. We said, hey, how are you guys prepping for a potential Brexit? We gave them a few different options, gave them the option, of course, to write in with their own. We said, hey, are you buying S&P or some sort of index puts? Are you buying vol? It could be in any form, could be VIX, could be VXX, pick your poison. We said moving to cash, or do you just pretty much think Brexit won't happen Mr. Sebastian, first off, what is your vote, and then what do you think is winning our poll?
I mean, I think that I'm thinking about the Carnation Instant Brexit, and how you're going to love it in an instant. And you remember Carnation Instant Breakfast? That was like this chocolate.
That was all the rage back when I was a kid.
Yeah, Carnation Instant Brexit. So how are people preparing for this? I think you've got people. I mean, we already have an amazing amount of money in cash. I think that's the thing that is, people keep wondering, why aren't we selling off? Well, because if you look at kind of how allocated the market is to cash, it feels like, with how much cash is on the sidelines, the market is, I would think that the VIX was at 35, not at 14. And that's part of the reason why we haven't had these big sell-offs is because allocations to cash are so high right now. So I'm kind of, I think you're going to see people say, I'm going to cash. That's going to be leading. Interesting.
And what is your vote? Or do you have a different alternative? You can have a write-in if you like.
I vote for long VIX, long SPY. That would be my trade. We
didn't have that particular one. We'll have that be a write-in for you. It's only you're limited in your options with the Twitter poll, pun intended. You said moving to cash would be the winner. Actually, it is the faraway loser. Only 10% voting for moving to cash. And then 26% saying buying vol in some form, right? About tied with about 23% buying some sort of S&P or index split. And then a whopping, it was 50%. It's coming down a little bit today, only down to 41% now of people saying the Brexit just won't happen. They're not doing anything for it. So kind of the opposite, Mark, of what you expected. People not doing anything.
Sitting in money. I mean, think about this, though. That's a big group of people going to cash. Yes, it doesn't sound it's the far and out loser, but when you 10 to 15% of the populace moving to cash, that's a big amount. That's a lot of people if you think about it. And I think that's really a sign of what's going on. And I think that's a kind of indicative of why we're not having these big sell-offs, because people are going to cash. There's nobody to sell their long positions right now.
Yeah, it's true. If you think of our audience, I tend to think of our audience as a super elite subset of the broad market. But if you think of them as some sort of surrogate for the broad market, you're right. 10% of the audience going to cash would be a substantial amount. Of course, it still doesn't mean it's been a bad business to be in from a volatility perspective. If you are indeed in the vol business, looking at some numbers out of SIBO, VIX futures, open interest surpassed 500,000 for the first time just this week, back on D-Day, the 6th. And then, of course, open interest, new all-time record of 501,000 the day later. And open interest overall up nearly 100%, 99% year to date. So not a bad time, even though things are still somewhat muted, as we said, from a volatility response perspective. Still overall not a bad business to be in. And since you're talking Brexit, Mark, let's just jump to that. There has been a lot of news lately. We talked about him last week, I believe, on Volviews about Soros making some bets in gold and elsewhere. He's kind of being widely touted now as not being a believer in terms of the Brexit being any sort of positive. He's firmly in the bearish camp. He thinks if they do leave, it could indeed destabilize Europe. He's also got some issues going on with China. So a lot of people are touting the fact that he's back and firmly involved in the investment side of his funds. He turned it into a family office a while back, so doesn't take outside money anymore, but he's back in and doing it in a heartbeat. And of course, he has some history with the UK, Mark, so people tend to watch what he does from a UK perspective, which is kind of interesting. Either way, he's been trading up quite a bit over there. It seems like he's doing it in a couple of directions. We talked a couple weeks ago back that he was loading up about 250,000 shares on gold. It was Barrick's Gold, which is ABX ticker, that he purchased. Again, this is data from the first quarter, so he's obviously could have amended or reduced or increased some of these positions by now. He also picked up about 1.1 million GLD options. They don't say in this particular breakdown what he did. I'm assuming he's picking up calls and verticals and things like that. I don't think he's betting against gold. He also picked up about 2.1 million SPY puts. Again, they don't talk about strike or anything else like that. I'm assuming they're somewhat out of the money SPY puts, maybe some verticals and things like that as well. So a lot of people kind of wringing their hands saying perhaps perhaps Soros is the canary in the coal mine here, Mark, that Brexit is going to be, despite what our listeners think, is actually going to be kind of the polar opposite of that, and some huge thing. Is this coming up a lot in the pit chat? And what are your thoughts on our friends, Mr. Soros, going short SPY and long gold?
Well, I don't think too much about what Soros thinks personally. I don't think he's I think he's a smart guy and he's done some really smart things, but I don't know that ace trader is, and certainly some of his big shorts that he's taken have just been kind of fizzled. Now, is he right in the fact that the market is underpricing Brexit risk? I think he is. So from that standpoint, yes, I agree with Soros. But do I think that, we're in for some imminent doom? And do I think that a purchase of gold is the way to handle it? No and no. Gold is, honestly, gold, really? Like, there's just better ways to do things. And I love that he spent some money on SPY. If you're trading that much SPY, why aren't you saving yourself a little headache and doing it all in the SPX is my other question.
That was my first question when I read that. I was like, why is he not doing SPX? Why would you do 2 million SPY contracts? I guess he likes his broker quite a bit.
Indeed. It's love your broker. Well, I think his broker doesn't like paying SIBO exchange fees.
Well, either way, you're
pricing
right.
That he's getting.
People always laud Soros for his, betting against the guy who broke the pound, et cetera, et cetera. People forget some of his other less well-timed trades. We talked about it, I think, on Volviews a few weeks ago about how he was pretty infamous on not getting into technology until early 2000, which, as you know, was probably one of the worst times ever. Where his firm was still, I think it was the Quantum Fund was his flagship fund, and it took a drubbing there, particularly in Q1 as the dot-com meltdown began around March of that year, and they were still long a lot of tech on the way down, and so people tend to forget about that. They forget about the guy who dove into tech very late. They always remember his wins, which I guess is good for him, good for his PR, and who knows. He may have some insight into this one particular area of Britain, in which case, who knows? Maybe he's interesting. Are your pit chatters, are they at all up in arms about this, or is it kind of business as usual for them over there?
No, I think a lot of people are paying attention. A lot of people think that it's underpriced. These celebrity traders, they're kind of like our kids. We remember all the cute, fun things they do, and we tend to forget all the crappy things that you send them to the corner for. Otherwise, if we remembered every negative thing kids did, there wouldn't be any human beings anymore. So I think that's kind of just human nature that we forget all the cruddy things he's done. Yeah, we've been talking a lot about the Brexit thing. I think it's something that we are paying attention to, and a lot of people think it's underpriced. A lot of people think there's real value in setting up some smart short positions, especially when VIX got into the 13s. It was a real opportunity to buy vol, and now that's gone away. I mean, VIX has, without much of a sell-off, VIX has made a nice little move back toward 14.5, and VIX futures are nice and firm as well, and the vol has popped as well. So there is, it's not the same layup that the market is starting to get wary of things. Let's just put it that way.
All right, as listeners hopefully don't get weary of our special option block live from a train. We're going to keep on rolling right on into the odd block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the odd block.
All right, everybody, that funkiest of tunes means it's time once again for the odd block. My favorite portion, one of my favorite portions. I like when you guys write in with your questions too here on the show, but one of my favorite portions here of the old program, of course, the portion of the show where we peer with our finest dare stalker caps and trench coats into the dark alleys and the shadier sides of the world of options. Try to find what's going on under those rocks there and those overturned things, what's lurking in the shadier side of the options business. Going to kick things off actually, this is one we haven't talked about. I can't remember in quite some time. Maybe ever on the show. The Market Vectors Oil Services ETF, ticker symbol OIH. Talk about a lot of other oil and energy related products, but for whatever reason, this one is not on our radar. What caught my eye because we have a listener question about this exact name today too. So kind of odd. I guess everyone's got OIH on the brain. Can't really blame them. Crude, a lot of action, been lighting it up out there. This one closing today right around 30.5. Off about 40 odd cents, or about 1.5% on the day. So not the best day for OIH. If you're not familiar with this is a rules-based index intended to track the overall performance of 25 of the largest U.S. listed publicly traded oil services companies. So if you want to play oil in that sense, a basket of the large oil companies, OIH may be one of your contenders. There's a few contenders for that crown. OIH, just one of them. Uncle Mike likes XLE and a few others out there. So there's a lot of different ways you could play, or you can just go the straight up oil ETF route like USO, or hey, go WTI if you are so inclined and go straight to the big guns. Either way, OIH, like I said, 30.5. Name does about 12,000 contracts a day, so fairly decent paper. Certainly from an odd block perspective, that's blowing the doors off the normal 200 to 300 contracts a day. A lot of these names we talk about here today doing 54,000, so quite a bit, to use a technical term. About 42 to 1 calls over puts, and that should give you some guess, some hint as to where we're looking today, listeners. And if you pull it up for yourself, go down to the July options chain. That is where our eye was drawn today for a pretty sizable, looks like a fly going up out here in July. It was, in particular, the July, not regular July, the July weekly, so expiring on the 1st. So a fairly near-term trade. 30 half, so 30.5, 33, 35 half fly going up. Looks like paper buying the 30 halves 12,500 times, selling the 33s about 25,000 times, and then doing it again 12,500 times on the old upside. Looking for your nice bullish fly here with a nice lock pin, hopefully, if it all works out, right around that short strike, that 33 handle. We saw this going up 3 blocks over there on the Philly. Looks like someone else maybe came in and piggybacked this a little bit, but overall the volume numbers are about the same. Open interest is non-existent on any of these strikes. Literally, these are zero open interest. So clearly this is all opening paper. The timing of this is somewhat interesting. Of course, we're past some of the big announcements out there in the crude space. He clearly needs this thing to run a little bit shy of 10% and then sit in the next few weeks. Not sure what he's seeing on the radar that's going to drive this. Maybe he's planning on some of the other events coming up, having a latent impact, Brexit or others, driving crude on these or I should say, the basket of these crude companies up a little bit. Either way, it's an interesting time. So looking back on the chart of this name, this thing hasn't gotten to those levels that he needs, about that 33 level, since about a year ago, a little less than a year ago, about July of last year or so. So interesting stuff. Mark, I'm trying to remember the last time we had a size fly like this, let alone go up in such a near-term environment. What are your thoughts on someone really banking on a very short-term kind of specific pop here in OIH?
Yeah, I mean, that's exactly right. They're looking for a real pop in the name, and it's a cheap way to get access to that. That's the big advantage of the trade, is that, they're looking for a pop and a stop, and they didn't want to spend very much money. And that was why they executed that thing. And, it's a good payout ratio, too. And that's something we shouldn't forget. It's got a real nice P&L line, if you will.
It does indeed. Yeah, I could certainly see the appeal of it. And indeed, he does also love his broker. A lot of contracts. But yeah, certainly better than just gobbling up the 30 halves and rolling those dice and hoping for the best. We always like a fly, preferably in that scenario, to some of those other interesting stuff. We'll have to see. I'll have to mark this in our to-be-watched category. In fact, I'm going to do that right now, so we can keep an eye on this one, listeners, because this is a very, very near-term trade, and this guy needs a very specific thing to play out in a short period of time here in OIH. So we'll have to watch and see if he was indeed correct. Next up, we haven't talked about this one in a long time on the show. Not our typical odd block category. This is good old AT&T, a.k.a. telephone. Mark, did you ever spend any time out in the telephone pit on the SIBO?
I was never in the telephone pit. I never, in fact, by then, telephone was not much of a big deal. I did trade Comcast when Comcast bought the big bulk of AT&T, and that was really interesting, which they then later sold. But I never traded T itself.
Yeah, you always knew a guy was an old schooler on the SIBO, and he referred to this as telephone. That's how you knew he was probably around in the 80s, maybe even earlier, down there on the floor. Oh, yeah, I used to trade telephone. That was apparently the big pit way back in the day. I also kind of came in on the tail end. I never really slung that. When I got down to the SIBO, on the equity side, IBM was the big dog. Then, of course, a multiple listing happened, and all the fun began, and then Intel and Microsoft and everything else joined the party down there, and it became quite a free-for-all in those latter days of the dot-com boom there. But we are focusing today on this one name, AT&T, of course, ticker symbol T, one of those rare single tickers, closing today at about $40.09, up about a quarter or so on the day. Not a big day from an underlying perspective, but a decent day from an options volume perspective. This name does about 60,000 contracts a day, as you might expect. A telephone puts it up. I'm saying it now, too. AT&T puts it up there quite a bit. Decent volume name. This one doing about nearly 209,000 contracts today. 29,000 contracts, I should say. About 8-to-1 calls over puts. That once again should tell you where our eye was drawn. And once again, we're going out to, actually this time to June. So not playing in the weeklies so much, but instead in the straight up June. We saw, the June, actually, I'm sorry, this is a wee bit farther out on the old spectrum. So not regular June, but June 2017. So this might be our first mention of June 2017 options here on the old odd block. So they get a star in and of themselves. And what we saw was someone loving themselves some upside, a fairly tight vertical going up out here for some impressive size. It's the June 2017 45.50 call spread going up. Paper buying for 34 cents. Doing that a whopping 75,000 times. So yes, 150,000 contracts total, listeners. There is some OI open on these strikes, about 50,000, which leads me to believe our friend here has been here before. Or perhaps he was inspired by someone who likes these strikes and has decided to pile in, because the odds of 75,000 coming on the heels of 50,000 like that are pretty small on such random strikes. It seems like he's probably building, in which case he'd be open about 125,000 contracts of this vertical, which is interesting on a number of levels, Mark. It's interesting for the size, obviously. It's interesting for the time frame. We don't see a lot of that far out upside, and then fairly tight verticals. He's not giving himself a lot of room. He just wants 5 handles, and he wants to get it by about a year from now. I don't know. What do you take on our friend here putting more money after some additional cash here on good old telephone?
Well, it's a low vol stock that doesn't move around that much, and the guy is looking for some upside. Maybe he's even dumping his stock against this, and he's holding these call spreads in case the stock goes up. Could absolutely be a cash freeing up vehicle to get into something more interesting. It also gives him the ability to, catch a little bit of a rally and in kind of slow fashion. So, the way my gut says that this guy is dumping stock against this, and maybe a lot, and this is his way of keeping some upside in this name if he's wrong.
Yeah, it certainly has the air of being a leg of something else. It seems like something else is afoot with this particular name. It does not appear like it's just straight up call vertical. It definitely screams, "Hey, I'm working on something else," and that year I think I can certainly get behind him dumping some stock, using this vertical as a little bit of in his back pocket in case the worst should come to pass, or kind of mitigate his deltas. Because you're right, just straight up this vertical by itself doesn't make the most sense. And let's move on to our final name / victim here on the old odd block. We got a frequent offender here on the old show. This is Marathon Petroleum Corp, ticker symbol MPC, closing today about $37, $36.95 to be precise. Kind of unched on the day. So it wasn't the underlying that caught our eye today. Excuse me. This name it does about 8,000 contracts a day, doing about 19,000 today. And again, about 30 to 1 calls over puts. So that should give you some inkling, once again, of what we were looking at out here, what caught our eye. This time we're going to go pretty far out, not as far out as all the way to June 2017. Instead, let's cut it off at the other J, Jan 2017 here. It was a Jan 2017, another vertical, the 50-60 call spread going up. Looks like paper selling the 50s and then buying themselves some of the 60s. Doing it for 50 cents and an eighth, 12.5 cents here, respectively, on this trade. Doing it, about 8,000 times today. This one up in 3 blocks earlier this morning over there on the Philly. Obviously, getting some splits on the 60s, a.k.a. that's why they paid an eighth as opposed to a normal price. Looks like they're closing out on some of this and perhaps unwinding. There is some size OI on this strike. About 93,000 contracts open here, in which that is the case. If this guy is sitting on about nearly 100,000 of these verticals, then he's got some to go. Perhaps he decided discretion, the better part of valor, and deciding to unwind some of that, or maybe also perhaps he had that vertical against some short stock, and he's also taken off that as well. He put this trade on. I should mention the initial vertical looks like about April 21st. And then he sold the stock actually back decent level, about close to 5 handles up from here. So if he is indeed buying back the stock, he's doing all right on this. And then the options are kind of almost academic at this point. He's just unwinding, took the stock, and he's looking pretty good. Maybe he'll come in to unwind the rest here. So perhaps a decent winner here to close out the odd block. Mark, what are your thoughts here on our friend? Looks like he's unwinding at least part, not all, but part of this pretty sizable vertical.
Well, when you see something like this, pay attention for the next trade like this from this guy and piggyback him. That's what I think when I see that kind of success. Is there are guys that come back to the kitty over and over and do pretty well, and this guy seems to be one of those. So keep an eye on this name, and if he comes back in, hop in. That'd be the way I'd play it. By the way, speaking of odd block, did you see all this HSY stuff going up today, Mark?
I saw some of it. Give us an overview of what you thought.
June just exploded. They just ran June vol up to crazy amounts. Stock was up a couple bucks. This is a low vol stock. June expires in a week, and the 105 calls, which are $9 out of the money, went from at a nickel to 20 bid. So, needless to say, I bought the July pars, sold the June 105s, and put on a very cheap call diagonal to take advantage. There was all sorts of other plays on it, but they ran vol up. I guess there's another one of those Nestle rumors, so we'll see how well that lasts. My guess is I'm going to end up converting this thing into a time spread for free, like I did Xilinx, which is, there's been a couple of these things that have popped, and you've been willing to take the directional risk. There's been a lot of ways to produce some dollars.
Yeah, I'm looking at those right now. Those June 105s went out 20. They went out standing 20-cent bid. Of course, the stock was up nearly $3.
Wow!
20 cents at 66 cents. They went out those 105s, and about 1,000 of them traded today. So decent paper there. The June par is also putting up about 6,000. The 95s putting up about 4,000. So you're right. Her good old this is Hershey. In case you don't know HSY listeners, they were lighting it up today. July pars. Yeah. July pars also. So you could have done a lot of nice verticals.
I did a bunch of July pars. Those are the ones I bought.
It's like you could have gotten the June par 05 for, nothing. And just the July works as well. You can do either way. As long as you got some leg on that 05 leg in June, you're probably doing all right. You're right. 20 cents at 66 cents. Not a bad one. 15,000 of these July pars also going up today. So, yeah, pretty active day out in good old Hershey's doing nearly 40,000 contracts. There you go, listeners. A little bonus odd block activity coming in late breaking here as Hershey lighting it up again. Yeah, there's probably some of that old M&A kicking in again, and we love that kind of stuff here on the show because it causes nice froth and nice little discrepancies and disturbances like this that we as options traders love to take advantage of. Technically, going to give us a nice bid on otherwise worthless calls. All right, that's going to do it for the old odd block today. I think Mark's train is somehow getting close to the studio. So while he's doing that, let's keep on rolling. It's Thursday. It means it's time for you guys to take the reins. It's time for the mail block.
It's time to take your seat on the All-Star panel as we read your emails, tweets, Facebook messages, website comments, and much more. It's time for the mail block.
All right, Mark is pulling into the station, so he'll be here just in time for the show to be done. But we'll see if we can get him to chime in on a few of your questions before the end of the show. We'll start, of course, the mail block, the portion of the show where you guys get to take the reins. No shortage of ways for you guys to hit us up. Let us know what you want to talk about here. No shortage of ways to do just that. The website, theoptionsinsider.com, probably the easiest place to find all that good stuff with the questions at theoptionsinsider.com via email, stock twits, Facebook, Twitter, the whole 9 yards. Or, of course, if you are around at 3 o'clock, we'd love to hear from you guys there as well for some of your live tweets and questions. So you can hit us up all the usual platforms. Or if you're listening via Mixler, you can use that chat as well. If you do, you have to have a Mixler account to do that. So I know some of you like to just lurk in there and then post your questions elsewhere. It's all right. We won't hold that against you. I know sometimes people get tired. I don't want to have yet another account. Even though it's free, I got you. I feel your pain. So we won't bug you with that. Let's start off with an easy one. This one comes from J.M. Ferrari. I like the name. He writes, do you guys have a service that alerts on unusual options activity in the mornings on a daily basis? Thanks, your website is great. We get this question a lot. So that's why we try to answer it like once a quarter or so, just to update you guys. Know we have a lot of new listeners and new people surfing over to the site. We obviously do a lot of unusual activity. We do put out a lot of it on the website and via Twitter and Facebook and everywhere else that you guys could follow us. We certainly hit on it a lot on this program here on the Odd Block. So if you are so inclined, you can tune into this. Do we have a specific service that alerts in the morning? No. But we're thinking about adding something like that because you guys ask for it all the time. So we may do something like that. What we do have right now, intraday, in addition to the unusual activity alerts, we also put out a lot of hot options alerts. Usually right now it's midday and end of day. We're toying with maybe adding an opening one as well, and that's kind of what's lighting it up at right that moment in the marketplace. What are some of the hot names, the active strikes and options that are kind of drawing our eye, for lack of a better term out there, what we're kind of paying attention to. You guys love that, so we don't have that going on here. Unfortunately, we don't have that yet, but you can follow us on the website and on Twitter, Facebook, wherever else you like. And we do have a lot of other stuff that approximates that. Nothing in the morning yet. If we do get something like that, though, I will be sure to point it out to you. All right, next up, we've got, here's a good one, Mark. Let's see, this one comes from 777. He, or perhaps she, writes, what adjustments should I make when trading options on expensive stocks versus regular price stocks versus cheap stocks? Well, there's a lot of room for interpretation here on what he terms a regular price stock versus a cheap stock. Let's just, for the sake of argument, let's say expensive is, your price lines, your Amazons, pushing the $1,000 range. Let's say regular, maybe somewhere around 100. And cheapies are our typical odd block candidates, like our sub-$5, sub-$10 names. So, Mark, using those guidelines, what do you have to say for our friend here, Mr. or Mrs. 777?
Well, I think the key is to understand your capital allocation to the trade. If you're going to spend $2,500 trading a $25 stock, you really shouldn't spend much more than $2,500 trading a $1,000 stock. You need to make sure that you kind of have some uniformity to your capital allocation. And also understand that, you have to be far more careful on, your defined risk. I mean, names like Priceline can drop $100 or $200 and you could lose a lot more. So they're not, it's not like they're tailor-made for strangle selling. So you also have to be aware of the margin requirements. I think those are the two things. I think the other piece is you will be surprised how much gamma you are buying or selling when you do one of those trades. because expensive stocks, they have less gamma, but, you can lose a lot or make a lot off that tiny amount of gamma because the stock moves so much more than you're used to with these like a small name. So those would kind of be the main things I would point people to watch.
Yeah, there's a lot of ways we can obviously skin this cat. I think you hit on some of the major ones. Margin, obviously, that goes hand in hand with sizing. If you're blasting out 30 to 40 weekly puts on some cheapy $5 name, and you move into an Amazon or a price line, you're probably going to be doing 1 lots, maybe 2 lots. Again, every option on those for 100 shares. How many 100 lots are you going to be buying on a $1,000 name? So bear that in mind when you're going out there. That may mitigate or affect some of the strategies you want to do when you're looking at usually harvesting a bunch for cheap names and getting a bunch of cheap premium versus doing a 1 lot for a nickel on a $1,000 stock isn't really going to be that exciting. Certainly from a premium harvesting perspective. So you may have to adjust. Not that you should be blasting out that kind of cheap stuff anyway, but it certainly will make some things less attractive for you from that perspective. And also, again, a lot of these big names are going to have the tendency to swing around quite a bit. So you can easily get stopped out or gamma scalped out, or whatever you want to call it there on some of these big names. A lot more chance for that than some $3 stock, dropping to $2.50. It could happen, but not as likely. So bigger swings out there could be making it more attractive for you out there. But the biggest thing, again, going to be size. And also, again, you don't mention which name specifically, so we can't really comment specifically. But a lot of these cheap names are probably going to be pretty illiquid as well. So the nice thing about some of the big names is if you stick around some of the, the front month near at the money and around that range, you should have decent size to be able to trade back and forth, decently tight spreads. So you might be a plus in the large name, and again, regular as well. That could be as well. But again, this depends on the names. But those are kind of some of the biggest ones. We would certainly biggest caveats to think about. We can probably do a whole show just on the differences therein. But those are some of the basics. You're probably going to go from 10 lots, 20 lots, 30 lots maybe to 1 lots. And, of course, the margin requirement. I have the capital. You're going to tap a lot of your capital in one trade versus maybe being able to spread it out a lot more in a couple of different ones. So it's going to change a lot of how you think of and how you implement a lot of those strategies. So bear that in mind. We got, let's see, we got a bunch of different ones here. We were talking about OIH earlier, Mark. So let's hit on this one. This is a question from Eric. He says, hey, the last few days I've traded October OIH calls. Well done. It seemed like it worked out. He says, I made money, but I felt like I left a lot of money on the table due to the bid-ask spread. How could I have improved on this? Well, we were just talking about this earlier in the show. OIH, of course, the Market Vector Oil Services ETF. Again, it's that basket of about 25 of the leading names from an overall oil services company capacity. This one has done fairly well, even in the last week or so, rallying about another 3 or so handles, and certainly since the nadir back in January is up about $10. So if he was buying calls out there, he probably did all right, like he said. But again, he was kind of lamenting the spread. Let's look up. I haven't had a chance to dig into the upside here. He doesn't say exactly what he traded, so he didn't give us specifics. So let's pull up, I don't know, let's go out about a month or so. Let's go to July and look at some upside here in good old OIH. Thing closing about 30.5. So let's say you're a little bit out of the money, 33, 34. They're fairly tight, a couple of cents wide here or there. I don't see any massive gaps. You get a little bit farther out, obviously that's going to change a little bit. Let's go to October to see a little bit out there. And again, not a lot of strike selection out there, but what we see, a nickel, 8 cents wide. I don't see like there's a huge potential here to get run over, or drive a truck through these markets like our friend Eric is complaining about. I don't know, Mark, I know you like USO. Do you ever, A, sling any OIH, and B, have you been, you feel like you've been unfairly disenfranchised by the spreads out there?
Been expecting to be a little wide, but no. I mean, OIH is pretty active and pretty, pretty back and forth. I don't think you're going to have that same issue. I personally like XLE better than OIH. We also like XOP. Those are the two we tend to trade more, but I'm okay with both of them. But, OIH is fine too.
Yeah, I know you and Tusa prefer XLE. That's and USO is kind of your preferred straight up oil kind of trading vehicle as well. But yeah, I'm looking here while we're talking, and I don't see anything that's like, oh, this is untradeable. Don't touch it. Like we said earlier in the show, it does decent paper, about 12,000 contracts a day. Today, of course, was an odd day, but it did about 55,000 today. But still, 12,000 ADV. That's decent. That's a lot more than the lion's share of what we talk about here in the odd block. This isn't some 300 contract name. I'm looking at some of the open interest. There's a couple hundred contracts to strike all the way through June and July, maybe a little less as you get a little bit farther out, obviously, and some are a little lighter. But still, it seems like you can get what you need to get done. So I don't know if I see really what he's lamenting about. Maybe he got caught up in some of those things we talked about before. In general, you're just straight up buying out of the money calls and kind of hoping on a wing and a prayer for that to work out for you. That strategy over the long term isn't usually the best. That's why we're always talking about here, like we did in the odd block, turning that long call buy and setting it to one guy did a butterfly, which is kind of interesting. You can just do a straight up vertical, try to be a little bit more nuanced perhaps in your approach. That will also help. If you have some sort of short leg offsetting your outlay, it'll help you when those things are coming to pass. But that said, if you think the spreads are bad, adding another leg isn't going to help you. But again, I'm not really seeing what you're complaining about. Again, if you have questions like this, listeners, if you can include some specifics, hey, I bought these and then I sold them for this, maybe a little bit more information, that would help us maybe diagnose what's going on out there for you. All right, let's see. We got time for, let's see. We got a comment here from Gaston. Maybe he's a Beauty and the Beast fan. I don't know. I like that. He says, I use SPY options for longer term plays. Generally, I buy 4 to 8 week calls, so 1 to 2 months, obviously. And he goes on to write, when the sky is falling and the market is oversold, I do the same when the market is in a euphoria. So he likes to buy SPY. SPY options both times when the market is selling off and when the market is in a euphoria. I don't know, that latter might catch you. I mean, if you can catch the rally, that's nice. But that's also a time when those upside calls have a little bit of a bid to them. In which case you might find yourself overpaying from a volatility perspective. But in general, and here we are, I think that actually is the meatball listeners arriving at the studio, so I will just mute that for you. There we go. As we go on to, but yeah, overall, that's working for you, hey, if you like it, go for it. I wouldn't hold it against you. Again, watch out for the ladder. But if you're kind of more of an intraday or a shorter term trader, you like getting in, getting out, maybe that could work for you. Definitely to the downside when you're starting to see some of that, picking up some calls could work out in your favor. Let's see. Let's see. We got a bunch of weird ones. We already touched on this one from Eric. You know what? Let's see. Yeah, we got a bunch of weird. Let's see. Let's keep on going. Then we got a lot of the ones that have a little bit longer, a little bit more involved. I don't think we'll have time to get to all components of each of these other questions here. So instead, let's table the rest of the mail block and keep on rolling into Around the Block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, everybody. Welcome to Around the Block. Like the name implies, this is indeed the portion of the program where we break down what we're keeping an eye on for the rest of this week. A lot of people are up in arms about triple witching next week. I think we've said our share about that. If that voice, listeners, is familiar to you, the meatball has made it. This might be our first ever podcast from a train, Mark. So I'm surprised that you made it in one piece, but you made it just in time for the show to come to a conclusion. You got to answer some questions from a train.
I did.
A moving train. That's our first here on the old network. But I was just talking about they're on the block now. So kind of what's coming down the pike here on the show. We've already kind of poo-pooed triple witching in the past on the show. Not really the big thing it used to be. But of course, we got Miss Yellen coming up down next week. So what are your thoughts about that? Kind of touched on it at the beginning of the show. VIX a little bit muted. It kind of depends on your perspective. What are you kind of expecting going into next week and how we're going to play out from a vol perspective in particular?
I mean, I think you're going to see, like we talked about at the top of the show, a little bit of a crescendo in volatility. I think things are going to ease their way higher, and it could be significant. It doesn't have to be huge. It could be but I think it could be enough. I think you're going to see the VIX threaten 16 next week going into the Federal Reserve. I think Brexit is still a little bit on the back burner. Maybe it's on the low burner. It's got, with a saucepan on it. But at the front burner, you've got a pot of water that's salted already. There's
ready to go. Yeah.
There's some rigatoni over here on the
Brexit's
side.
Brexit's too far down the path.
There's some rigatoni on the side. and
it's a bridge too far, to use the old World War II terminology.
But I think a lot of people are going to be concerned about what the Federal Reserve has to say in their statement on Wednesday. I think it'd be very interesting to see how hawkish they come out. I know I think that we are severely underestimating how hawkish they may be.
Well, she said earlier this week, didn't she say that they're still kind of figuring out what to do with the non-farms number? Yeah. It looks like they're trying to find any material they can within that number to somehow justify the notion of it. If not in June, maybe later. They're still pricing. I was surprised to see with the Fed Watch tool over there at CME. They're still pricing in a surprisingly
What's the name
large
of the Fed Watch tool?
Steve, what is the Fed Watch
Joe, Bill.
But they're surprisingly. I mean, it's like non-existent probability for June, but July is still somewhere, I think, around a third, which kind of surprised me. I don't see what they have cooking up there that's going to make it happen a month later. But emergency rate increase. But
I mean,
weirder things have happened, I suppose.
I mean, I honestly think July should still be 50-50. Because I think they want to raise that bad. So what they are currently hoping for is that June was a weird anomaly with the Verizon number, with Verizon on strike and all these other pieces, and they can ignore it, and everything goes back to normal, and there's a huge revision up in July, and everybody goes kumbaya, and they go kumbaya, raise this, and they raise rates then, because they want to raise twice this year. That's what they're gunning for. They want to do in July and then in December if they can. All right, that's their plan, because they're not raising rates in September. All right, right ahead of an election.
Isn't it funny how that always happens? Right around the September, November timeframe, all of a sudden rate increases are off the table. It's like this invisible hand suddenly retreats.
Yeah, well, you've got the election coming up, and I don't think that they
don't want to lose their job,
right? And if Janet Yellen wants another 6-year term, right? Then her pal Hill better get in on the Hill.
I would be impressed if they actually come out and did it right in the teeth of the election. Bam. Like a quarter point, half a point. I would tip my hat to them
market for actually being a free and independent agency.
That would be.
Too.
I would actually have more begrudging respect for her.
Will never
after
happen.
That. No, it will not.
Will never happen.
I can't remember the last time any Fed chairman did anything like that, but it would be hilarious.
That would be awesome.
I would give her bonus points for that.
That'd be hilarious. Then the next, then that October, the employment number.
How would President Trump respond?
Well, no. Then what you have is the Labor Department coming out with a $500,000 job increase in October and November, right in front of the election.
Amazingly how that could possibly happen.
It would be hilarious.
That would be hilarious. A lot of things would be hilarious. Unfortunately, listeners, that's all the time we have for hilarity on the old show today. But of course, when that music kicks in, that means it's time for us to bring to a close this extra special train edition of the Option Block. But before we go one last time, Mr. Greasy Meatball, what's cooking over there in the land of the Pitt and Carmen line? What are you guys up to?
Well, a couple of things. One, I wrote up an article for realmoney.com that you can read on my thoughts on Karen the Super Trader. Feel free to go.
You didn't have a chance to vent. We'll do it on another show later.
We will.
Andrew had a chance to say this two-piece, but I know you've really been digging into this.
Well, it's just stunning the way that thing went down, and I think complaint number 39 is really the one.
I saw your article on that. It was kind of interesting. So, when you add that sort of language to your firm or your fund prospectus,
something was already
that's odd.
Yeah. So I think the fund was created with the intent to defraud. I would read my article. I think it gives some real thought on who's to blame, and it's not just her. Let's just put it that way. July 19th through the 22nd. Come see a couple of live podcasts. Come see Mark Longo, Mark Sebastian, Andrew. We'll get Mike Tusaw down. And,
if he ever comes back from his sabbatical here.
We're going to do a 3-day event. It's going to be a 3-day event in Chicago. We're going to plus a Cubs game on Tuesday night. Go to in the show notes will be the link to sign up. We've got some special VIP pricing for Options Insider listeners. Make sure that you guys check it out because it'll save you a lot of money relative to what the general public is gonna pay. So come and check it out. And if you're an Option Insider listener and you love all this content, come and throw us a bonus support in this respect. And this way I can buy Mark Longo 2 steaks instead of just one.
Ooh, one to go. I like it. So listeners, make sure to do that. Take them up on that generous offer. You'll see the link in the show notes. We'll probably tweet it out there as well. We'll put it on the website as well. So if you are going to be in Chicago around that time frame there, come join us. It's a multi-day spectacular, really, listeners. So you'll get your value's worth. And we'll be down there doing a show or two as well. So if you want to chime in for a live show, in addition to the way we do it now, it's always pretty fun. So check it out. Check out the show notes or the website or our Twitter to learn more. Go over to optionpit.com as well. And on behalf of the Greasy Meatball and Uncle Mike, who shall return sometime, I'm sure, and indeed myself, I want to thank all of you out there in the listening audience for downloading and streaming and subscribing, and of course sending in such great questions. Keep them coming, and for tuning in live. We love you guys as well. And we'll see you next time right here on the Option Block.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.